Good evening, Manoj. How are you?
I'm good, Mukund. How are you?
How was your week?
Week was good. I made some money. I wasn't very, you know, bullish. I wasn't very bearish either. But I was waiting for my opportunity. Markets gave me an opportunity. I grabbed it with both the hands, shorted with both the hands, made some money, and then waited.
Yeah, I was looking for only uptrend opportunities, even in this so-called bearish markets, and I
Mhm.
got enough of those every single day.
That's nice.
Yeah, so
Especially this market, if you are buying, going on bull trades, that's commendable and honestly gutsy.
but it was 3%, 2% gain for the day. I'm like done. I'm happy.
Yeah.
So I didn't go large position sizes. So I did well in Coursera. I did well in ANET. I did well in Sentinel One. I did well in a couple of others as well. Reli, and yeah, it was not bad at all. And of course, I have a long term position in NVDA, so I just left it alone and I said let it go. But yeah, it was a good sign. So let's just quickly go through the agenda, just for people that are new. We go through what we mentioned last week, then we talk about earnings, the best and the worst, and then we go through SPY, QQQ, IWM, and also the Dow Jones average DIA. And then this time onwards, we're going to do a 10-year yield view as well. So last week, earnings, NVIDIA, Manoj, 101% year
Wow.
over year. That was a blowout. 30
Unbelievable.
billion
Honestly,
plus.
this is what a company is called in terms of delivering results. I normally do not, I mean, of course, I have been a fundamental guy for the last 10, 15 years, but for the last 2, 3 years, I have moved on more into technicals. But when you see a company growing with 50%, 70%, 100%, I mean, you cannot be, missing that stock when that stock gives you opportunity to buy.
Yeah.
Any opportunity in this stock or deep, say maybe 10%, 20%, grab it with both hands is what I would be doing.
The other two, three earnings that did well that I was watching, Workday. This is a steady performer. Workday has been one of those companies we mentioned last week during earnings, saying this would be a good earnings as well. Workday was good, consistent, just doing as usual. Snowflake, I wanted to talk about Snowflake. A lot of people ask me questions about Snowflake. Why aren't you buying? The class of 2020 IPOs, which includes Snowflake, Airbnb, Uber, DoorDash, they came out really heavy valuations. So this was the VCs selling at the top. So their stocks have gone nowhere, literally. If you look at it, it's like they have been accumulation phase for a long time because they were marked up quite a bit even when they went private. For example, Airbnb came out, the IPO price listing was 83, 84, 85, went at 150 the first day and it's stuck there.
Right.
So I'm like, they've already, and I think same thing is going to happen. My feeling is with NVIDIA now 450, 480, 500. It's going to hang out between 480 and 500 for quite a while, regardless of earnings, because they've been marked up so much.
Right.
The forward valuations are going to catch up.
Right.
Affirm did well in earnings as well, so they might see a little uptrend. Interesting stock that not many people talk about is Splunk. SPLK is the ticker. If you guys get a chance to take a look at it. 2-day uptrend, strong peer price power earnings gap. So watch for Splunk until next quarter. It'll consolidate a little bit. If it gives you dips, buy into Splunk. It's a good peg. PEG is power earnings gap. All right, those are the best earnings. Some not so good earnings. Domo had really poor earnings. Peloton, long-time people who are following this COVID stock, Peloton did poorly. It's risen up a little bit today, but still poorly. And then Woof, which is Petco, also did poorly. So those were the three that didn't do very well. Domo is not a very good short opportunity. Neither is Peloton. Those stocks don't have a lot of room to go down.
Right.
Good short is something like SMCI, or actually, I've got a better one. VinFast, but you cannot short it. This IPO came out IPO at $9 2 weeks ago.
Oh,
Went up to 35. Went down to 20. Went down to 11. 3 days. 3 days.
wow.
Went up to 35. Now it is at 56.
You can't be kidding me. 9, 35, 20, and 56. Unbelievable. Let me see the
Yes,
chart.
I'm not even joking. This is a ridiculous stock, right? I wanted to share the screen. Let me just share the screen on this one.
Please do that.
Really quick. This is a ridiculous stock. Look at that. This is a weekly map, weekly view. Look at, you can't even see anything but just one green pick. Okay, now I'm going to go to the daily,
Jesus.
right? Now I'm going to go a little bit more closer. Let's go to the 6-month view. Look at that. Then go to the 3-month view. Okay, IPO price 9, shot up to 35. This is the 1-hour view.
Hold a second. Is it a SPAC?
Yes.
Okay. Yeah, that's the reason it shows previous history as well.
Yeah, so $38 means the company is valued at $85 billion.
Wow.
This is a company that is not even shipping a single car in the US. They want to go into the US.
And yet it is $73, $74.
Now it is 68. That means it's valued at 300 billion, man.
Unbelievable.
I don't think that is right. I don't think, let me look at this. I don't think that is right. Something is wrong with the valuation numbers here. Let's go look at this. Look at the financials. Literally, I don't even know why they have so much in revenue. So common shares outstanding is about 2 billion. 2 billion shares outstanding. 2 billion shares outstanding, and the price is 68, about 150 billion. It's not 300 billion. That's what I thought. It's not 300 billion. It's what, but even 150 billion for a company doing ridiculously no revenue. Look at the annual revenue, 13 million, man.
Anyway. This won't end well. Definitely not. Definitely not. I don't have to say anything.
Okay. So VFS, watch it. It's not shortable yet. You can't buy options on it yet.
Oh, is it?
Some people told me they can. I just don't know where they're able to do it. I checked everywhere. I checked into brokers. I checked E-Trade. No, it's not available. But someone on my Twitter feed said, yeah, I was able to short it. I don't know where they got short from, but
so maybe they're shorting the common shares and not the options. Because if there are shares in the market, and if you're shorting it based on lending and borrowing, you can definitely. So they are shorting commons and not the options.
So it's a naked short.
Yep. Which is risky.
If you shorted it at 35, it's gone 100%.
Absolutely, which is very, very risky.
Yeah. Okay. So let's get back to VFS. Is an interesting one. Watch it while it goes along. Manoj, let's go look back at SPY this week and the rest of our indices. But this is the futures SPY.
Okay. So here we are. What happened last week and what happened in the last few days is a clear breakdown from the double top, which is here at 463534, which was double top of March 2022, which is 4631. From there, it has been consistently falling. If you look at the daily chart, if you look at the weekly chart, it is broken. So I'll say there is still a 10% probability that it goes on and goes towards 4635. There is 10% possibility. Why do I say that? Because I have been saying that this market has been driven by weekly charts for the last 1.5 years, or in fact maybe more. Ever since the market fell last year and then we recovered, it has been following quite a few patterns. I mean, it fell in the channel, it rose in the channel, it made a low somewhere around 200 weekly MAs, and now it is topping out, or maybe kind of topping out with a double bottom from the weekly chart as well. Apart from that, it has broken down of this channel and now making another channel on the daily chart. More than that, what I am actually now following is keenly is this head and shoulders. It is still not a completely clear head and shoulders unless and until it breaks down of it. So there is head and shoulders, yes, but there have been ample number of evidences wherein head and shoulders or inverted head and shoulders do not materialize properly, especially on the indexes. There have been, of course, last year market broke down on head and shoulders. This time, whether it does or not is something that we will see in the future. But right now, it has bounced off, and probably it may break down. We do not know whether it will break down. We do not know whether it will rally. But so far, it does is that it does not want to go up. So I would say just 10% possibility of market going up again. But I'm not holding my breath for markets to rally.
So here is the head. Here are the shoulders. Don't you need a neckline? Where's the neckline on this one?
This one. The red one.
Okay. So you're saying that it should go below 3350.
435. Now, here's the thing. So if you look at this particular zone, It's a demand zone of 4326 and 4280. This demand zone also coincides with the gap which has been left unfilled, which normally people believe in trading, which I do not. But this is what from say 4327 to 4302. This 25 points gap still needs to be filled, which also means that we will probably back down of this neckline. Now, what happens is whenever there is a demand zone just under a critical area, market will definitely give a bounce. It has already given bounce just above the demand zone, whether we break down of the demand zone or not, and that also coincides with 50 sorry weekly 50 MA, which is just under the demand zone. So these three areas, this
this is daily or
neckline
weekly?
and the demand zone and the 50 MA, all these three things combined, I would say next few weeks, not just days, next few weeks would be very, very crucial. So I would be very cautious in terms of my shorts for next couple of weeks or maybe 2 to 4 weeks. It would break down and then bounce back. So the choppiness that we saw today would be seen in the next few weeks as well. So don't be very long, don't be very short. Even if you are short, cover it as quickly. If you are getting money, cover it as quickly as you can. Don't hold on hoping that markets will go and make a new bottom and then you'll become a millionaire in the overnights or over a few weeks. No, don't do that.
I don't know in any market if you can become a millionaire overnight, but
There
okay.
are people, let me tell you, there are people who actually want to go long and want to go short, and they want to hold on to their longs and shorts for a long period of time so that they can make money off the futures and all those things.
Okay.
They are the ones who actually lose all their shirts and pants.
All right. Let's go to the NASDAQ futures.
Yes. Again, similar chart, head and shoulders and channels. Where did we bounce? We bounced exactly near the bottom of the channel, and then the weekly as well. So is 20 EMA. 20 EMA is where we actually, kind of did it yesterday as well as today. It fell, then bounced, fell, and bounced. So I would be very, very cautious around these levels at the neckline, at the lower end of the channel, and 20 EMA. Don't hold your shorts even if you are holding your short. If you are long, you get out quickly because the charts are broken. It is not giving you opportunities to hold your longs. So I would be very cautious in my longs. I would not be holding my shorts for a very long period of time. Again,
So
on Nasdaq.
let me ask you something. Today was the RSI was fairly, we were in the oversold range. So is that why we got a little bit of a bounce? If you look at the relative strength, we seem to be in the oversold range. So we got a little bit of a bounce, right?
Yes. So if you're
I mean,
talking about on the daily chart, it wasn't as oversold. It was oversold last week, and hence we saw the bounce as well, right? One very critical point that I normally follow is, as I have been saying again in the past as well, RSI, MACD, stochastics, these are all secondary indicators. What are my primary indicators? The candlesticks, the trend lines, and the moving averages. On the daily, there is a neckline as well as this channel. On the weekly, last week we closed exactly at the 20 EMA on the weekly, which is a very, very huge support for the bulls as well as bears. So even if there was RSI, the key support was actually in the form of the trend lines and in the form of the 20 EMA of the weekly. Now there is one key question that comes to the mind for the new traders: is when should they move on to? When should they look at the 15-minute chart or the hourly chart or the 4-hour or daily or the weekly? I would say always start with the higher time frame. Start with the weekly, or maybe if possible, go for the monthly as well. But you cannot be trading based on the monthly and the weekly charts. You can hold your view based on the monthly and weekly, and then move on to daily, 4-hour, and the hourly to take your trading decisions. Very rarely your decision should be based on the 15-minute chart. Very rarely.
Yeah, no. So I
Follow
think
it, but don't take your decision based on that.
the way I think about it, Manoj, is I look at the weekly chart to get a idea of two things. First step for me is find out what stage are we in. Are we in the accumulation stage? Are we in the uptrend stage? Are we in the distribution stage? Or are we in the downtrend stage? First, find out, right? That gives you that you can get best in a weekly chart, monthly chart. It's best to zoom out the time frame. Number one.
Absolutely.
Once you get that, the next thing is finding out, okay, within that you will find whether we are an uptrend or a downtrend. So then you draw your channels and you draw your lines to figure out, okay, within that now, do you see it going down? For example, even in the accumulation stage, sometimes it's not just flat. Sometimes it's rising, but rising slowly.
Right.
Find that out as well. And then you go progressively down, right? I go, okay, monthly, then I go 4 hour, 8 hours, weekly, monthly, weekly, then I go daily chart, then I go even lower, then I go 5-minute chart sometimes.
Right.
Okay. All right. That's NASDAQ. How are we doing on IWM seems most broken, but okay, this is Dow.
Yeah. No problem. I mean, it's a same thing. We'll come to the IWM as well. So Dow Jones, of course, one of the weakest in terms of the way it has fallen yesterday and over the last few days, because it was strongest and now it has turned to be weakest in terms of falling in terms of the percentage that it wants to give up. After falling yesterday, it is stalled somewhere around this level, which is lower end of the falling wedge. It's on the daily, on the weekly, exactly at the 20 EMA. So not a surprise that why it is stalling somewhere here. Plus point for the bulls is it has closed with a hammer. Hammer is a positive sign for the bulls. So if bulls wants to take home something for Dow Jones or which is DIA, two things: closed above 20 EMA on the weekly. Secondly, closed above the lower end of the wedge, and third, very critical point, hammer. These three things give some solace that you can maybe go long, but don't go very long saying, hey, it's a very good thing that I would now go and be very long and make a new high. The reason I say that is because it is a rising wedge on the verge of a breakdown. Rising wedge on the verge of a breakdown, it will give a bounce, maybe 200 points, 500 points, and then give up. And once it gives up on the lower end of wedge as well. So be
The
very,
thing,
very
Manoj,
cautious if you're holding around.
the thing that I was looking at as well, right? When I look at the Dow Jones and I start seeing, okay, if it is going to go even in the short term a little bit higher, what is driving that higher move up? Dow Jones, like most of the indices, is made up of a lot of different stocks. So
Right.
then I started looking at, okay, which are the, for example, markets, sectors that are doing very, very well.
Right.
I don't see too many, man.
Right. That's what the key
Energy
thing
seems
is.
to be the only one, and a little bit of consumer discretionary. That usually means we are heading towards a recession.
Absolutely.
Okay.
That's a very key point. We should actually keep an eye on which are the stocks, which are the sectors and stocks which are leading the market in terms of maybe holding the market. And as you said, the discretionary stocks are the ones, and definitely we need to be very, very cautious.
Yeah. Okay. All right. Let's keep going now to. Oh my God! This looks like a multiple top
Oh
with a
my! I
falling.
mean,
This is the falling channel.
yes, falling channel. Now, one very key aspect that we need to actually, I mean, again, for the learners, that how do we spot whether the market has broken down or whether the market wants to give up? Look at this. It was this point where markets actually, just wanted to rally. We all assume that markets are going to make a new high, but then it made a big fake out, which is a breakout which failed. And then what happened there after that was for everyone to see. Complete sharp breakdown. A
Lower
sharp.
lows and
Normally we don't
lower
see that,
highs.
but this is very horrendous.
Lower lows, lower highs. And it's
Absolutely.
actually broken the 100 MA, right, on the daily.
200. That's 200 EMA.
Wow, it's even broken the 200. What's your green line?
So this green line.
No, below that. The line, not the curve.
This one.
Yeah, that one.
Okay, so this is a key support which has been holding on the weekly for a very long time. So from here, it has been holding all these levels.
Yeah, it's even broken the 200 line. This is a downtrend for a little bit of time. I wouldn't be surprised
so since May
1700.
of last year, it has been holding. May and June of last year, it has been holding this trend line. This is a key support. And just under that, there is a demand zone area from 1690 to 1600 to 1690, and then this trend line. So this area, once we reach, is key for the bulls as well as bears. Bulls would like to give a sharp bounce from there, and bears would like to break it down. We'll see how it happens and when it happens. But right now, we are focused on 200 EMA on the weekly. 200 EMA on the daily has just given up. And since it has been a sharp downtick, I would say it is not going to be easy from here for the market, for the stocks to go down from here, especially the small caps one, IWM stocks. I would not be very bearish at this point because this sharpness has to normalize. For the next maybe couple of weeks, it would dilly-dally or maybe consolidate in a range, maybe try to give a breakout of the channel as well. That will smoothen the sharpness. And then from there, it will again, if it wants to fall down, it will.
Yeah, if you look at it, Manoj, if you look at it before, right? if you draw a straight horizontal line at the 1800 or a little bit above that range, um, right,
Yeah.
right to that, and then all the way down to 1700, you look at that period of when it was little after, between March and April of 2023, March and April, early March, go down, go down, go down a little bit more, cursor down, cursor down, cursor down. Okay, all right. From there, all the way at that point, all the way until June of 2023, a little bit up. You see that whole zone where it's just hanging out.
So this was a consolidation zone and it's exactly above this trend line. So I had this box which we spoke about for a very long time. See,
Yeah.
this is the box. So we spoke about this when we this is the actual time actually when we started our YouTube videos, and we talked about that market is consolidating in this range, and then we broke out, then we backtested, and then we continuously rallied. So
Yeah, so
chances
people,
there will be this
people,
kind of consolidation here as well, and then
people that
we'll
are,
see from there.
let me just quickly make a quick comment for people that are following for trying to understand basics. That box is the accumulation phase, phase one.
Yes.
Then you see phase two, which is the markup phase or uptrend. You want to call it whatever you want. That's going up all the way. There is not much of a distribution phase. You see a little bit of it, but in this case, it does a distribution for roughly about 3. This is the daily chart for about 7 days or so, and then it starts the markdown phase, right? So that's phase one, phase two. And another point I want to make is markets are always fractal. What happens in the short term happens in the long term. What happens in the long term happens in even long term. So it follows the same phases.
Absolutely.
Okay. All right. Let's go to the 10-year yield really quickly.
Yeah. Give me just 1 second.
And we're zooming up and up and up.
This is 10-year yield chart. Double top kind of a thing here.
0.2%.
Yes.
When is the last time it was 4.2%?
It was October 2022, last year.
And then even before that?
It was before that. Let me.
2008, I think.
So.
2008, yeah.
Yep, 2008.
Yeah.
Yep.
The yield curve. Yeah, so 2008 and then October. What happened at that time?
We know. You don't even need to tell the people what happened.
Making a comment, man.
Great financial crisis. Wow. Okay, so since you brought me to a monthly chat, let me just make a quick comment. MACD. So this is where it made October 2022. It made a high of 4.33%. We come back, we consolidate, make a bull flag, and then we break out and make another new high of 4.36%, which is a new high on the chart for the price. MACD does not make a new high. It's a cautious sign for the bears of bond yields. Very cautious sign, because even if it wants to maybe go a little higher from here, chances are that MACD would not make a new high, because it's very clearly not moving much, even if the 10-year yield is moving up. So I would be very cautious in terms of if I am holding a short position on bonds, and I would try to book out my short positions in bonds. Now, in terms of the weekly double top, in terms of the daily, exactly at the upper end of the channel, and kind of moved down from there. So I would be very cautious in terms of the yield probably may not go much higher from here in a very zoom jack manner. I would say it may come down probably towards the lower end of the channel as well. But so far, I'm not bearish on 10-year yield, which means the yield might come down a bit. Price may start going up. When I say not bearish, so price and yield of the bond move in an opposite manner. So when price goes up, yield comes down, and when price goes down, yield goes up. So yield, I'm expecting it would come down towards maybe 4% kind of a range.
Got it. Okay.
Yep.
We're doing that treasuries. What I want to do is really quickly talk about some of the earnings coming next week. Nothing major that is going on, but I just mentioned a couple of them that are coming up in terms of earnings. One of them is PDD. When I look at the chart for PDD, is a China-based company. Most of you guys might probably know them. Pinduoduo is the name of the company. China overall has been in a consolidation phase. All the stocks have been in a consolidation phase for quite a bit of time. So I'm not very bullish on this. I'm not expecting anything great. Look at the consolidation. It's been consolidating on the daily chart. It's been consolidating on the weekly chart for a long time. It's just not, yeah, you could say it has been going up and going down, but this is just, if you look at it from 2022, even with higher earnings, goes up a little bit, consolidates, goes up a little bit, consolidates. So we're still in the very early stages. I'm not going to be too bullish on PDD.
Right.
The other stock that is coming up for earnings is Box and NCNO. NCNO was a big SaaS stock that everybody loved back about 2020 or so. If you look at the long-term chart, I'm just going to show you a 5-year view on this chart. This one actually, looks like a Christmas tree is what some people say. Went up all the way, and then since then it's just been on a downtrend. And then since then it's been consolidating for the last, I would say, since October. This is one of those that not done very well. Earnings expectations are not very high. I'm not going to expect too much from this stock as well. The other earnings that is coming up is Box. Again, not a company that I'm following very closely. I just mention it because it's one of the companies that a lot of people follow. Stock is trading, within the channel, not very interesting overall. I'm not very bullish on this stock as well. Trading at about $30 a share. It's got a lot of support and risk. This is one of those choppy trades, right? You want to get in very quickly, you want to get out very quickly. If you look at the performance on the
Very
daily,
choppy,
I'll show you. Every time you have earnings, this thing just gaps ridiculously down. Right? You have earnings and there's a gap down. You have earnings and it's a gap down. This is just, I'm not going to be expecting too much from this stock. So those are the ones that are coming up for earnings next week. For all of you who have more questions for me or Manoj, drop a comment, drop the notes. Thank you very much for watching the video. And be very tight with your stops, be very tight with your trades next week. Manoj, thank you very much.
Thank you.
Please follow us on Twitter, please follow us on YouTube, and I'm looking forward to the discussion next week.
Sure. Thank you so much.